Vietnam is considering a major shift in how small businesses can access credit. A draft amendment under public consultation proposes allowing digital and virtual assets, including crypto portfolios and tokenized intellectual property, as collateral for business loans. This could change the financial landscape for Vietnamese startups and manufacturers who have long struggled to secure bank financing due to a lack of traditional assets like land or factory buildings. The Ministry of Finance is pushing this change as part of a broader revision of the law on support for small and medium enterprises. If adopted, the proposal would legally recognize digital assets as legitimate forms of collateral alongside intellectual property and future-formed assets. The move signals a regulatory shift that could integrate crypto and tokenized assets into mainstream financial systems. Vietnam's SME sector is the backbone of its economy, representing about 98% of all businesses and contributing 40% of GDP. Yet, fewer than 40% of these businesses have access to formal bank credit, largely due to the requirement for physical assets as collateral. By opening the door to digital assets, Vietnamese regulators may be acknowledging that crypto and tokenized assets have real economic value and can serve as viable financial instruments. Stablecoins. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. In particular, could be an early adopter category for this kind of collateral. They are less volatile than other cryptocurrencies and are already used for remittances and savings in Vietnam. If banks accept stablecoins as collateral, it could provide a bridge between traditional finance and the crypto ecosystem. The proposal is also part of a global trend toward tokenization and the redefinition of asset classes. As Vietnam introduces this idea, the global market for tokenized real-world assets is expanding. This could position Vietnam as a regional leader in financial innovation, especially in Southeast Asia, where digital finance is growing rapidly. However, the proposal is still in the draft stage and subject to public consultation. There is no guarantee that it will pass in its current form. Banks may also be hesitant to adopt digital collateral due to regulatory uncertainty, volatility concerns, or internal risk management protocols. Even if the law is passed, implementation could be slow, requiring new systems and training for financial institutions. The next key signal will be whether the draft amendment is formally adopted after public consultation. If it is, then we can expect to see more activity around tokenized assets and crypto-backed loans in Vietnam. Financial institutions may begin exploring how to integrate digital asset valuation, risk assessment, and custody into their lending frameworks. Investors and entrepreneurs should watch for announcements from Vietnam's Ministry of Finance or central bank regarding the finalization of the law. In the broader context, this development could influence other Asian markets to reconsider their stance on crypto and digital assets as collateral. It may also encourage more startups to tokenize their assets or use stablecoins for liquidity, knowing that these could potentially be used as financial guarantees. The proposal is not without risks. Digital assets are still relatively new. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Informal financial systems and carry inherent volatility, regulatory ambiguity, and security concerns. However, if Vietnam's approach proves successful, it could serve as a model for other countries seeking to integrate crypto into their financial infrastructure. The real test will be how this policy plays out in practice once implemented. Will banks adopt it aggressively, or will they proceed cautiously? Will startups and small businesses actually use digital assets as collateral, or will they prefer traditional options? These questions remain unanswered, but the policy shift is a clear signal that digital assets are being taken seriously in Vietnam's economic planning.